Stock market all-time high as you see for last 1 year. With the real estate pricing and housing market has been going up and up in value, which is trying to cool down at the moment. While the Fed is increasing the interest rates, Fed approved the hike that takes interest rates to the highest level in 22 years. You might be wondering where you can park your cash. And when you think about parking cash, you might be thinking about CDs, certificate of deposits, which are relatively very high rates at the moment, 5% for 1 year. As you can see, these are the top interest rates for July and August 2023. But wait, I will show you a way you can earn high interest rates, even higher than what you see on my screen. For 1 year, you see 5%, 5.25%, 5.35%, so on and so forth. But if you think about multiple years, you start seeing the interest rates are going down. 4.45% APY. APY is annual percentage yield. So this is for 3 years. This is for 5 years. So I wanted to introduce to you the best way to invest in certificates of deposit, and they are called brokered CDs. Now here are the brokered CD I can show you on Vanguard. So do your own due diligence, but for 1 to 3 months, you can earn 5.15%. 4 to 6 months, you can earn 5.25%. More importantly, if you put the CD money in brokered CD, 5.35% guaranteed for 3 years. Now, if you're like someone who I know who want to buy their home, but their interest rates are pretty high, the market is hitting all-time high in real estate in many areas within the United States. You can park your cash for 5.50% for 2 years. It's a guaranteed return on your investment, and you can see that you can take the advantage of the 22 years highest level of interest rates in the United States. The quarter percentage point increase will bring the Fed funds to rate a target range of 5.25% to 5.5%. Now, with the brokered CD, you can get the same benefit as to what Fed is trying to do. They're raising the interest rate to make sure that the inflation gets under control. While inflation is on the record high levels within the United States in the last few years, 5.6% of the CD can earn a lot of money to you. As an example, if you have $50,000 that you're planning for down payment on a house, but you don't want to buy because of 2 reasons. Number one, real estate prices are so high. So take a look. We have been going higher and higher and higher. This is the median sales price of houses sold for the United States in 2023, which is cooling down, but it is starting from 1963. From 1963, we have been seeing record high rates for the housing prices in Q4 2022, which is slightly going down at the moment, and it might be wise to wait for a little bit to see where the real estate and housing prices are going. Now, you can go on Vanguard and you can search the same information that I see on my screen without opening an account. If you already have an account, you can log into your account and you should be able to see that you can get 5.60% interest rates. The second one I wanted to show you is Fidelity, and they also offer brokered CD. As a matter of fact, most of the brokerage platforms, they do offer brokered CD. On Fidelity, you see 1 year is 5.50%, 18 months 5.30%, 2 years it is 5.40%, but the winner in this August 2023 is Vanguard, because that's where I see the highest interest rates. For 13 to 18 months, so think like 1 and 1.5 year, you can earn 5.60%. For 2 years, you can earn 5.50%. Now, you might be asking how much money that will be. So let's say if you have initial deposit of $50,000, as you see on my screen, and you keep that for 2 years at 5.60% interest rates. I will link this CD calculator from bankrate.com into the description box below, so you can click and verify this yourself for the money that you want to invest. But in this example, at 5.60% APY, again, APY is annual percentage yield, you are looking at $5,756.80. I'll go ahead and refresh, so you should be able to see. When you invest $50,000, you earn $5,756.80. Now, think about this way. Your earning will be $5,756. It is pretty high compared to national average. So if you see the national average right here, you will see that most of the people in United States earn $1,694.11 on the investment of $50,000, which is a pretty good investment. In other words, if you invest your money into one of the best CD offered into the market, let's say for 3 years at 4.45%. So just to take this as an example, let's go back and put 4.45% APY, and let's keep this for the 2-year period of time. You can see that you can earn $4,549.01. So what is the difference? The difference is 1.15%. So you are earning $1,156.61 more than any traditional CD. Now, you might be asking whether this is a secured investment or not. The answer is you need to verify, but most of the CDs are offered as the FDIC insured CD. I wanted to give you a quick example, and here is the example for the broker CD. In a moment, I will share how you can open up this brokerage CD just from your couch. You don't really need to go out of your home either. So this is an example. This is a brokerage CD, and just for the clarity, this is on fidelity.com, and this is Morgan Stanley Bank at 5%. Time period is 5 years. You can earn up to 5% APY. I'm sorry, it's not up to 5% APY. It is guaranteed 5% APY. The maturity date is 8/11/2028 because this is a 5-year time period. Minimum investment, $1,000. Can you invest $50,000? Yes. And the pay frequency is quarterly. You can see the QSIP ID right here. One thing that you want to verify is whether this CD is FDIC insured or not. So this FDIC insured, it is mentioned as yes. So this CD is guaranteed insured by FDIC. You do want to call your brokered firm if you're not sure and verify all this information. You can also find out the FDIC certificate number, minimum investment, incremental investment. So in other words, if you want to invest more than 1,000, it has to be 2,000, 3,000, 4,000. So that is the incremental value of $1,000. There is a survivor option, yes, and there is a federally taxable event that can happen when the CD gives you the interest rate at the end of the year or at the end of the maturity date. So contact your accountant or CPA as well. The issue date is 8/11, dated date is 8/11 as well, and the interest payment will start from 11/11, which what you can see right here after 3 months. The last interest payment will be 5/11/2028 with the maturity date of 8/11/2022. Now you might be asking me question how you can open up the brokered CD. Again, your traditional CD is pretty straightforward. You walk into your bank. Let's say if you have Alliant Credit Union bank account or this credit union account or brokerage account or any sort of relationship with this bank, you can walk in and they will open up the CD for you. We will talk about pros and cons of the traditional CD versus broker CD because there are pros and cons. But the biggest pro for me is just to earn pretty high interest rates. Instead of 4.45%, if you think about 1.15% higher, it is more than 10%, close to 15% again. Additional return on your investment when you put this money, and if you think cumulative interest on the return for the principal amount that you get. Now let's go back and take a look at what you can earn for 3 years, 5.35%, and it goes slightly down for 4 years, 4.70%, but it goes pretty high for 5 years, 5.10%. So this is again relatively guaranteed return that is not going to change. Now, if you have a question around how you can open this CD up, you can see this, and you can also go to Vanguard.com and follow these steps, and you should be able to see this. How do I buy a brokered CD? There are a couple of ways you can do it yourself, which I prefer, or you can call your brokered representative. In this case, you can just call Vanguard representative and they should be able to help you out. Step 1, you want to log in. Once you log in, if you already have the brokerage account with Vanguard, you want to go within My Accounts tab and navigate to Buy and Sell. Once you go to right here, the My Accounts tab, and navigate to Buy and Sell, on Buy and Sell landing page, select Buy CDs. So you can click right here, you click on Buy CDs. Once you buy CDs, you go to step number 2. If you have more than one account, you want to make sure that you select the right account to fund this CD. You'll need to select an account that you want to use for your purchase. Click the next button and you can see this is how it looks. So you can click the right account. Once you click the right account, you should be able to continue. So once you click the continue, you will go to the next page within your brokerage account. Number 3, the next thing you want to do is select the length of the maturity term and select CD maturity drop-down menu and click continue. So how it's going to look like this. So you want to click the maturity term right here. So you want for 2 years, 3 years, 7 to 9 months, whatever you want to do, and click continue. Once you click continue, you will have to select a bank from the list that is offering the CD. Again, you can do your due diligence, find out whether it's FDIC insured or not, select a bank that you want to buy the CD from. And I'll tell you why this is working the way it is working, because you can go on Vanguard but purchase a CD from Morgan Stanley. And that is pretty common, pretty normal. This is a not so much known brokered CD area for many people, which is why I'm sharing. So how this will look like, you click on right here, State Bank, India, Chicago 3, and click on continue. Once you continue, it will provide you with the amount that you want to invest, and typing this directly into up and down arrow. So as an example, they have said $1,000 right here, but you can change that by just clicking the drop down, because it will be in the incremental of $1,000, or you can also type in. Once you type in, click on the continue button as it shows in this video clip. Step 6, and this is the final step that you want to make sure that you follow. Review all the details so there is no mistake in order before you submit. When you're ready to proceed with your purchase, click the submit button to purchase the CD. Do make sure that you verify all this information and everything is accurate before you go ahead. So this is going to be looking like this. So you select and then you verify all this information and submit to purchase. And once you submit to purchase, you will be able to see the confirmation number. As you see, you will see the account, and then you can exit out of your account, and then you'll be getting an email. For the most part, you want to check your email box just to make sure that what you bought is correct. So this is the way, and this is the calculator how you can verify how much money you're going to earn based on the target date, based on the maturity date, and all of that. You can also change this by months, and you can find out, let's say if you bought something for 7 months, you should be able to see 5.6%, how much you're going to earn for 7 months, and you should see this right here, $1,614.77. I hope you liked this video. If you did, do hit the like button, subscribe to the channel, and turn on the notification bell. The last thing I want to leave you with, what is a brokered CD? A brokered CD or certificate of deposit is a CD that investor can purchase through the brokerage firm. In this example I showed you, we purchased this from Vanguard. You can do it from Fidelity, you can do it from TD Ameritrade, or whatever the brokerage account that you have. This is not really your traditional bank, so you will be doing that online. Although the bank still initiates the CD, it is outsourcing this to sell it to the firm like Vanguard, like Fidelity, like TD Ameritrade, like JP Morgan Chase that you can take the advantage of. The broker invests this considerable sum with the bank and then sells this investment in smaller pieces. Now, the key advantage or key takeaways are here. A brokered CD is a CD that investor purchases through the brokerage firm or the sales representative rather than going into directly to a bank. A bank still initiates this broker CD but outsources selling it to the firm that are trying to find the potential investors. Brokered CDs are typically yield more than the regular CDs because they are more competitive in the market. And they are in the secondary market often as well. Brokered CDs are generally offered much more flexibility than the traditional bank CDs, and the flexibility of brokered CDs can make it easier for investors to make mistakes. So make sure that there are no mistakes, make sure that you click the right buttons, and you can also get the help from the advisor, and you can call them, you can call your brokerage firm, and you can do all of that. With that, I want to also leave you with one last thing, the differences between the brokered CD and the bank CDs. Issuer and accessibility. Bank CDs are issued directly by the banks and credit unions where you have an account. When you open up the bank CD, you are just lending money to the bank, and they in turn will pay you the interest over a specific term. Bank CDs are typically accessible through the bank branches, online platforms, or by the phone. Versus brokered CDs are issued by the banks, but they are sold through the brokerage firm. When you invest in a brokered CD, you purchase the CD through the broker who can act as an intermediary between you and the issuing bank. The brokered CDs are often available through the online brokerage platform. The second thing is availability of options. You have various options, whereas bank CDs have specific terms. They mature such as 3 months, 6 months, 1 year, and longer. So those are bank CDs. Versus brokered CDs that provide access to broader selection that we saw 7 to 9 months, 12 to 13 months, 13 to 18 months, so on and so forth. Liquidity and secondary market. Bank CDs typically have fixed return or fixed terms, which means you agree to keep your funds in the bank within the CD for a specific period of time, whereas brokered CDs can offer more liquidity compared to this bank CDs. All the brokered CDs have fixed term. They can be traded in the secondary market before maturity. Last thing is FDIC insurance. You really want to make sure that your CDs or the money that you are locking in are FDIC insured. The bank CDs are typically FDIC insured for sure for the maximum limit allowed by the law, which is typically or currently $250,000 per depositor per institution. Whereas brokered CDs, they are FDIC insured many times, but not always. So you want to make sure that these FDIC insured CDs, they're held in broker's name. It is essential to make sure that broker CDs you purchase through FDIC insured and you understand the terms. So you want to call out your financial advisor or you want to call out your brokered firm. Yield and pricing, we already talked about. Bank CDs are typically lower interest rates than what is offered in brokered CD. And brokered CD is not really a very well-known option that people know. But now you know that. If you did like the content, consider subscribing to my channel, turn on the notification bell, and also hit that like button. Thanks for watching.